You're listening to the Millennial's Choice Show, Canada's most trusted podcast on all things real estate, finance, and entrepreneurship. Here's your host, Matthew Ablakan.
Welcome to another special episode of the Millennial's Choice Show. We're going to talk about real estate, finance, and entrepreneurship. I might toss something your way to the guest today.
Ooh, got a curveball coming today, guys.
I don't know how the reaction is going to be, but I'm excited to hear the reactions. And I'm looking at the wolf, CEO of Altree Developments, Zev and Jordan.
The Wolf of Bathurst Street.
Sorry, correct name Leonardo DiCaprio.
Ooh, so I want to welcome to the show again. You guys are not strangers to the show, so thank you for taking time out of your day to be on here. CEO of Altree Developments, Zev Mandelbaum, and basically the glue that makes it all happen.
The VP
The
herself.
Vice President, Jordan DeBrincat. Welcome to the show.
Thank you for having us.
Welcome.
Yes, and then obviously, guys, for those of you listening, if you hear a voice that sounds somewhat like mine, it's Danny's. Danny, we're on today.
The better looking voice.
Guys, welcome. Seriously, we appreciate it. And there's a lot happening in the real estate market. There's a lot happening in the world. You guys have a lot of experience to bring to the table. We want to keep this light. We want to keep this fun. So, give us a short, 2 minutes background, Altree Developments, your experience. Let's get right into it.
How about you take it away?
Fine. 2 minutes. Preparation. No, third generation real estate developer. Grandfather started a company called H&R. My father, Lantera. My family's involved in many development companies. There are cousins from Medallion, Linvest, Davpart, Marlin Spring, Altree. What am I missing here? Firmlands, pretty much half the development companies in Toronto. I grew up working in H&R, then went to Lantera, worked for my dad. Still do work with my dad quite a bit. Then I founded Marlin Spring with my two brother-in-laws, split off about 5 years ago as part of the succession plan, started Altree Developments. Today, we are a residential and hospitality developer with dozens of sites throughout Toronto. Jordan has been with me from the very beginning. And we love what we do. We build amazing, incredible properties in different neighborhoods in our wonderful city.
I'm an owner of your properties. I've purchased at your site, right? So I'm excited about that. Did you want to jump in there, Jordan? You want to throw anything else in there?
No, I think Zev covered it. I mean, I didn't grow up in the industry. I kind of just came in with Zev about 10, 11 years ago. I think, it's a testament to still be in this industry. It's a very difficult one to be in. Definitely a lot of sleepless nights, but we love what we do, and we're looking forward to continuing bringing homes to people of great city of Toronto.
Nice. How'd that happen, by the way? How'd you guys meet?
Oh, the curveball. First one out. So just so you know, we're both married, but not to each other.
Separately.
I have 3 children. I have another wife. And I say another wife because Jordan's also a wife in many regards. Jordan has another husband.
Yes.
By the way, we've met both of them. Shout out to both of them. Lovely people.
Yes, Zoe is incredible, and so is John. They say we look good together. 99% her, 1% me.
I gave you 1%, eh?
I mean, it's more like 0.5%. So he's just being.
I gave it when I was 20.
Well, the shit.
But they gave me the 1% when I was 20 pounds skinnier. So I don't know. Now that I've put on some COVID weight, I'm not sure, right? Jordan's mom worked for my dad and still does work for my dad for something like 20 years. Okay. So she was in Lantera. We both started working in Lantera together as little kids. And we grew up in this industry. She said she didn't grow up in the industry, but she actually did. But we grew up from Lantera times working together. We went to Marlin Spring together. So we've done the moving along the industry together, building together for well over the last decade, if not a couple decades.
That's awesome.
I think it's very important though, when you are dealing with a developer or builder, you want to know their family roots. You want to know where they come from.
Because absolutely. It's a legacy thing for us. So, I'm third generation. Our family's up to G5. So 5th generation. I have 3 kids. I can't screw up the legacy now. And Jordan same. So what happens is you get into this concept of quality. You get the concept of, pushing the boundaries on creating a good project. So funny. We were in a conversation just yesterday with someone senior. We're talking about which developers do a crappy job and which do a good job on the end sell product. Like how good is the finishes?
What conclusion did you guys arrive?
And they were shocked by one of our projects, like 36 Zora, how much emphasis we're putting into the finishes and how good quality they are. And the answer to Jordan and to me was, you build a building once, it's a legacy, it's got to be perfect. We're not in and out for the big buck. It's not like tomorrow I'm going to do widgets or I'm going to have a different career path. This is basically been in my blood and been in our blood since the onset. It's going to go on forever, and we're going to continue doing what we're doing. So we got to have a product that stands for itself.
I love, because at the end of the day, that's what people are going to see. That's what they're going to know you for, right? The end product. So it's super important. And I just want to say something that you mentioned about Jordan. You remember your speech at the CN Tower event, which, by the way, great memory. We're never going to forget it.
Good.
Lots happened that night.
I know. I haven't actually not been in the CN Tower before that since I was like 5 years old.
Us too.
Same, it was a long time
Yeah.
since, yeah.
And then, Danny had a long night of making sure we got to the subway.
And to be honest with you, 25 years ago when I was 10 years old, it was a different view.
For sure. Yeah. But do you remember your speech?
Of course.
Do you remember the...
Sure.
But do you remember the
Calm
comment?
down, man.
You know the comment you made? I mean, we won't say the comment here, but remember the comment that you made about...
Oh, go Leafs. Yeah, right.
Yeah.
That didn't work out so well that night.
But remember with Jordan, being the person that, you go to Zev and say, look, Zev, we it's what lasting impression are we leaving our buyers with, other people in the industry with, et cetera, et cetera. And then you said something, you made a very funny comment. And if you remember it, I literally spat out my drink when you made that comment. I'll tell you off camera because it was hilarious. And, I almost made a fool out of myself in front of the two burglars that were in front of me that caught my mist.
Okay, now I'm like searching my memory. What comment it was?
You will have a laugh. I just don't want to say on air. It's funny.
No, do it on
Off-air
No,
conversation.
Definitely, trust me, definitely
off-air.
Okay, let's go like the hunch moments. Okay.
Yes.
Cool.
But I say that it's so important about knowing where you guys come from because it's kind of that old saying, like with history, it repeats itself most of the time. But at the same time, if you know where you're coming from, you know where you're headed. And so it's great to see that that's a legacy you guys are building. Are you going to want your respective kids to be a part of this industry one day, or?
So I can tell you, I'm one of 27 grandchildren in the Hofstadter dynasty, and not all of us have entered in the industry. But obviously, it's something that you would hope for, but you never want to push a kid into what's not best for that kid. You want that kid to make their own decisions in life and to be able to be their own person and choose who they want to be. So I certainly don't want to put pressure on any of my children to have to follow in our footsteps or whatnot. Should I hope that they do? Well, listen, it's a legacy and hopefully it continues for generations, and I'm sure it will. But you always have to do what's best for that person.
Absolutely. So we had the mayor of Vaughan on our show. We did a great episode with Mayor Del Duca. He mentioned how they committed to this whole action plan, housing plan initiative that the premier has put out there. And the city of Vaughan is committed to 42,000 homes over the next 10 years. Or I shouldn't say homes, I should say pieces of real estate. Could be condominiums, could be single family homes, townhomes, etc. What are your thoughts on this new initiative from the premier? Maybe some of the backlash he's been receiving from different mayors and different councillors from different municipalities. What are your thoughts as a developer?
I think that there's no question about whether or not Toronto, Vaughan, and I want to talk about the GTA as a whole, needs housing. I think they, from the backlog of COVID, they had, hundreds of thousands of immigrants approved to come into Canada, but obviously it took a little bit of a slowdown during COVID. But those immigrants still want to come here. And I believe that there was a backlog, and I think a lot of them kind of came through and they let in more than what they were anticipating. They all need a place to live. And the reality is every mission and every vision of a developer is to provide homes for people, whether it's an investor who's looking to rent out, whether it's someone who's looking to move into it. I think all municipalities putting a importance on committing to a certain number of homes is very, very important. But you also got to understand is with the amount of bureaucracy and stuff that we deal with as developers, is that truly feasible?
Well, what do you mean by bureaucracy? Let's hear it, because a lot of people look at developers, I'll be honest, and I defend you guys a lot because number one, we work with you guys a lot, but number two, we know the kind of people you are. So any business is in it to make money. Whoever doesn't think that is not running a business, they're running a charity. So at the end of the day, you guys get painted as this big bad wolf, not intended, but it's not the case. Most of the time it's not the case. So
well, if we were just in it to make money, we would do something else.
I agree.
Because there are easier ways to make money. The returns are okay, but they're not like, there's a lot easier ways to make money than to be a developer without the risk you take.
People think you're making like billions of dollars.
No, it's called placemaking.
Yeah.
What we do is placemaking. It has 2 points to it. There's a money aspect to it, but I'm going to quote William Zeckendorf, who's probably one of the biggest developers or most famous developers in New York City, who built everything from Worldwide Tower to many other buildings. And one of his most famous lines that describes development is, you don't develop for the money. You develop to develop. The money is just a way of keeping score.
Makes sense.
And that's what it is. Because I'll tell you one thing, it's great to make money and all. But when you develop, that drug to develop of seeing accomplishment, it's about accomplishment. It's about taking something from nothing and creating something to it. It's an art piece. It's creativity. It's mastering the concept of creating something beautiful, just like an artist does. Money obviously is a driver to it, but money is really a way of keeping score. It's not the ultimate. I mean, the ultimate way of, there's a lot of other businesses. It's that concept of satisfaction, of coming down and seeing something today that looks decrepit, creating a vision in your mind and executing on that vision, and all of a sudden turning around, and next time you drive by, you have a landmark, you have an art piece. If you've created a Lego tower as a kid, you have that same endorphin. If you've created a project in high school or in college, or if you painted a painting, or if you built a treehouse, or even if you actually managed to cut the grass in the entire yard, you actually have that sense of satisfaction where you turn around and you see the garden. That's the satisfaction. That endorphin is really what drives me. I'm sure Jordan drives you too, to see what you've built, to create that painting. Those layers that you were able to put together to change, that is the real driver behind it.
So back to the, bureaucracy part of that, that's, impacting the business. We understand now, like the business side of it, it's not just for profits. You bring in a whole different perspective, because there are builders that are out there, their only purpose is, I just need to make money. This is the way I know how. But you're coming at it from a whole different angle, which I think is very important for consumers.
This is going to make me sound like an arrogant asshole, but I don't need to make money.
I was going to say at this point, Gen 5, you guys have made
Yeah, listen,
But that speaks volumes.
it's always good to make more, don't get me wrong.
Oh, for sure. But
it's about more than that.
it's a different driver, right? But there are other developers.
Purpose.
Yeah, but there are other developers, correct me if I'm wrong, where they just do it for the money, right? And is that usually where you find people focusing on the wrong thing, whereas, they don't really care too much about the detail?
Absolutely. People definitely focus on the money, but these are long-term projects. It takes years and years to get paid. So it's a game of patience as well. Where I find that most of the time it gets lackluster is because people just lose patience with the system.
Got it.
It's very aggravating. It's like, for every door you find, there are 10 walls, and for every step forward, there are 10 steps back. Wow. So you have to have a lot of stamina. Now, thankfully, I'm sitting next to a woman who has the most stamina when it comes to dealing with pain in the asses. But you can speak to Jordan about that, what it takes on a daily basis of how many setbacks to move a building forward to get to the finish line. I think where the details go is that by the time you get to the finish line, you're so burnt out and you're so tired and you're so frustrated that sometimes you're like, screw it, let the details go. And the developer who makes it in the last mile is the one who has the perfect product.
Yeah, because I feel like you guys have this cycle, and we're going to get back to the bureaucracy for sure. But
Yeah, I don't want to put this in a bad context, but someone told me a great line. They said, the Leafs are like the Titanic. They're great until they hit the ice. The Leafs did it really well this year, but they didn't make it to the finish line. If you get tired when you're at the end, and that's what happens with the Leafs, they always start off great, they do great, but then in the end, they just lose in the playoffs. If you can't make it through the playoffs, that's what separates you from the real winners. And to be the real winner, it's not the first 80% of the project, it's the last 20% to get through.
Yeah, it's like you guys have this cycle of like, okay, we acquire the property, we have the vision, everyone's excited, there's so much momentum. Then you just start doing marketing, then it starts coming to life on paper, and there's sales involved, and there's parties involved, and there's this like huge, like just momentum forward. And then you get the sales, now you get construction financing, or you start construction already, and you're building the building, and throughout it, there's all these problems. And you kind of start, correct me if I'm wrong, going like, feeling like this until like the end. And it's almost like, I just want to be done and out of this building and move on. But as you're saying, that's where the pressure really is to now rise above that and deliver something spectacular.
Perseverance.
Yeah.
Perseverance, baby.
One of the things that I think, and I'm probably one of the most consistent people I've ever met. And if you know me, if you've seen my notebook, like I'm very consistent. I write with one color pen. I don't want anybody else write in my notebook. I'm very consistent. And I think one of the quotes that I live my life by, and I think it really goes to show what we do on a daily basis, is without confidence and commitment, you'll never start, but without consistency, you'll never finish. If you're not consistent throughout every aspect of the project, whether or not it's in terms of your vision, whether or not it's in terms of your attitude, your relationship with people, your willingness to deviate from a change, because in our business, there's changes and there's problems in every retrospect, you'll never finish. You need to have the same level of consistency from the beginning until the end. And if you don't have that, you'll never finish. That's why a lot of people get tired out, not being able to see something through, because that consistency with them is just not there. And I really think that that's what makes each developer different. I think where Altree has really, has been able to shine is we know who we are not, and we know who we are. And therefore, when you know who you are, you know who you can't compete with, and frankly, who you don't want to compete with. We don't necessarily want to compete with the big developers that are downtown Toronto because we have something to offer in a different area that they don't have something to be able to offer in. And I think when you're really finding what your niche is, that consistency in finishing is that much higher of a success percentage because you're in an area and you are working in something that you naturally excel at. The reality is finishing a building is very difficult. And even when a building is finished, our job is not finished. We have obligations, we have guarantees. The Tarion guarantees are for 7 years. That's a really long time. Considering that to get to a point of being able to start construction is usually anywhere from 4 to 5 years. Then you have construction, which takes anywhere from 4 to 5 years. So you're at 10 years. Then you have 7 years after that to be able to have that's 17 years of somebody's life. That's a really, really long time. And if you don't have consistency to be able to see it through, you've really lost the game. And I think that's what a lot of people don't have, is they don't have the stamina, they don't have the consistency to be able to see something through. If we revert back to something talking about the bureaucracy, I always like to bring a really great example of, zoning a building here versus zoning a building in New Jersey, okay? We have a site that we work on in New Jersey, and the zoning took 3 months. And when I was there zoning the building, they were like, "Oh, we're so sorry about the delay." And I'm like, "What delay are you talking about?" And they're like, "Oh, normally it shouldn't take this long." I was like, "I just want to tell you something, and this will just show you the bureaucracy." I said, maybe 5 years ago, it would take maybe 12 to 18 months to zone a project. That was comfortable. And if you were able to zone it in less than a year, you were like, "Holy shit, I won the lottery." The reality is now, it takes 18 months to 36 months to zone a building. And when I told them that, they were like, "There's no chance in hell that that's how it works in Toronto." And I'm like, no. Those are the timelines that we perform on. Those are the timelines that we need to make sure that are in our timelines, because obviously we're going to get into interest, I'm assuming, in this conversation. Interest is a killer. And if you're not budgeting for it, then you've already lost the game at that point as well. I think that explains the bureaucracy that I'm talking about. It's with respect to timelines. There's a solution to every problem. I'm a firm believer of that. Whether it's time, whether it's money, whether it's aggravation, there's always a solution. And there's a solution to dealing with all the red tape that has to do with the planning regime in both the GTA. And it's honestly time and relationship building. And I'm a firm believer of that. I think that if you perform at the right amount of time and you know how to deal with people, our business is 100% people focused. And if you don't have that skill, this is not the business for you. It's not about sitting behind a computer and getting things done. It's about picking up the phone when push comes to shove and saying, "We have this problem. We're going to solve it here on the phone. We're not going to go and try and say, oh, I got to get it to this person. It needs to go above this person." No, we're going to find a solution. We're going to talk about it right here. We're going to have a handshake, and we're just going to both execute whatever that solution is. And I think as long as you're budgeting for those things, and you're budgeting for the proper time and understanding that relationships and those types of reputations take time, I think all of the red tape starts to make sense. But I think just that example of how long it took us to zone something in New Jersey versus in Toronto, and that was 5 years ago, that's the type of bureaucracy that I'm talking about.
Yeah, and do you think, so two-part question. So first of all, New Jersey is more of a democratic state.
Yes.
Right? So it's not that much different from Toronto.
Toronto, yes.
In that sense.
Yeah.
Do you think that incentivizing the municipalities to create more housing or approve more housing would kind of speed up the process?
I think that there's a fundamental problem, is that just the city's just very understaffed. I think that there's a lot of projects that are underway. There's only so much that a few people can do. And a lot of the staff that are working there, they're not incentivized to get things through faster. There isn't a I don't like to say acknowledgement or any of those things. I don't work for the city, and I don't know what how the kind of intricacies of working for the government works. But I don't think there's no incentivification to be able to get things through. Whereas if, Zev were to call me and say there's a deadline at 5:00 or there's a deadline Friday end of day, I'm there until 11:59 trying to make that work. Whereas someone for the government at 4:59 is looking to turn off their computer. Two very different mindsets, because a deadline to me could potentially mean losing millions and millions of dollars, which obviously hits
I don't think we're going to fix the world. I don't think that the world is I think there's an opportunity here. And if there's one thing we've said so far, it's about consistency in motion, right? Subaru. Right. Anyways, consistency is what really matters, right? That's how we got through these 17 years. And inevitably, a developer will be through his project through at least one, maybe two cycles of the real estate market. Okay? Yet the consistency got him to the end. So we're seeing a pattern here where consistency gets you to where you need to go. Where's the opportunity? Because that's what we're looking for. Well, the more homes the municipalities bring, and that's great that Vaughn's going to get more homes, will help the problem not get worse. Because there's so many homes that are needed, and there's so many things that are needed, that it won't deteriorate as badly. But will it get that much better? Will it make homes more affordable? Absolutely not.
But why do you say that now?
Because it's impossible.
Because of the taxes, development charge?
The entire country of Canada, the entire system of Toronto, from the labor laws to the commodity laws to development laws to the taxes that the government relies on from the development and the amount of taxes that they're getting from it to the amount of homes they require, they can never catch up.
I don't think enough people realize how much the taxes are. Can you give us an example of what are your condo units?
If you have an $800,000 unit, over $350,000 of it is going straight to the government between development charges on educational development charges, Section 37 money, CBC now, all of that, you add it all up, and that's not even including your land transfer tax that you're paying at the end and the HST.
But couldn't one argue and just say, look, like government, you're talking about affordable housing. You like to throw this phrase out there just to get votes. Like, if you really want to do something about it.
Yeah, if they really wanted to do it, they would have no development charges and no HST. If you develop in New Jersey, for an example, there's no HST and there's no development charges. In Miami, downtown Miami, how much charges parkland, everything, all the levies, how much do you think it is per unit vis-a-vis the $350,000 here?
If I had to guess, knowing what we know here, our limited knowledge, I'd probably say close to like what it's downtown Miami. I'd say it's probably close to what we're paying here.
$11,500 a unit for a high-rise tower in downtown Miami. Wow. That same unit here, $300 and change $1,000.
So now what do you say to the buyer who says
30 times? That's what the government's taking from here. But where's the opportunity, Matthew? Because that's what we care about, right?
I think the opportunity is one of us runs for mayor.
I don't think it's going to change that much. And you know what? As much as nice as it would be, and as nice as it would be to fix the city and get it moving faster, and I think that should be our goals and our lofty goals, and certainly bringing more homes, I don't think affordability is something in Toronto that will ever be achieved. It's not achieved in Miami, it's not achieved in Tokyo, and it's not achieved in London, and it certainly is not going to be achieved in Toronto. And thereby, what you are investing in is in a commodity that is just getting more and more scarce. Yeah. Real estate is real. It's tangible. It's fungible. It's something that is real. And that, no matter how much they say that they're going to produce 1.5 million homes over the next blah, 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 if they can get to that number, great and wonderful. It's never going to happen to get fully to that number. The population is just going to keep growing. It's going to get more and more rare. And even though they're producing more homes, which is great for developers to get into the business and continue doing it, and great for purchasers to find new assets, you are investing in a commodity that will always, throughout the long period of time, the ups and downs, will become more and more rare, more and more unique, and more expensive. So when you invest with consistency, you will eventually win.
So one thing that people say about a developer, like they'll say, okay, well, if the developer was given an incentive, let's say the development charges, just an easy number, were cut in half, right? But there was no oversight by the government. It was just cut in half. And it was your job now to ensure the units were more affordable. Some people will argue that, well, no, consumers have gotten used to this price. Even on the back end, if the charges are now cut in half, the developer is probably still going to come out at that price, just pocket the difference.
Well, no. What's going to happen is if the development charges are cut in half, the construction costs will go up to match. You see, projects always make the same return because the variables that are there, there's so many of it, and there's so many people seeing it. If you say, hey, you know what, development charges are going to be cut in half, it should be passed to the consumer, Well, half the trades are going to say, hey, you know what? I can make a few more bucks on drywall. I can make a few more bucks on my kitchens. I can make a few more bucks on my plumber. And those prices will rise pro rata.
Wow.
The market equilibrium of price and demand, basic microeconomics will tell you supply and demand is always going to match the equilibrium price. What someone is willing to pay, that's how it's going to be charged. Who makes more money in the interim is probably not the developer, it's everybody else along the way. Right?
So there is no solution when it comes to making more affordable homes for consumers right now, especially in Toronto.
Oh, there is one solution.
Yeah.
And the solution is making it available for people to be able to afford the mortgages. And the way to do that is to get rid of a stress test. The way to do that is to buy down the rates. So, for example, if the Bank of Canada is nervous about a rate and they need to have high interest rates because of, they're worried about inflation, that's fine for goods and services. That's fine for operating businesses. But the person who needs to buy a home should get a rate buy down from the government. The government should buy down the rate as respects to residential. Just like CMHC does that, they should do it for all.
With that being said, don't you think that'll just cause even greater demand, and as a result, just kind of spread that gap between supply
You need
and
the demand because you need people to buy homes to build more homes, and to build more homes, you need it for people to live in. All people who are investing and buying condos, what they are doing is they're creating rental stock in the city that the city needs.
Yeah.
Purpose-built rental is very rare today. It's very hard to do. There's HST charged on purpose-built rental, which makes it also very difficult to build financially. Condos is purpose-built rental. And the more buyers you have, the more investors, the more units you have, the more rental stock you have.
Yeah, and actually, one thing I would argue, like against like what you're saying about what were you just mentioning about the
Well, if the rates get, let's say,
the rates?
down,
No, the one thing I would mention about the interest rate is that what Zev is saying, it's like the rate, they're trying to tame inflation, quote unquote, but then they're printing money and sending it wherever. But anyway, and that's another conversation. But
that's an aside.
But the interest rate conversation is interesting when it comes to mortgages because they're trying to tame inflation, but the mortgages are getting more expensive.
Yeah.
So housing is actually becoming more expensive.
Exactly. So they're actually doing the opposite of what they're trying to do. What they're really saying is we want inflation to come down and housing to come down.
Yeah.
So what you're doing by raising interest rates there is you're making housing more expensive, but you're bringing down inflation. Now, 30% of your home is generally spent on your cost of living. It's almost 50%, which means that the biggest problem in your life is your cost of housing, which is more than the deflation they're creating by lowering the rates.
That's true.
So really what needs to happen is it has to be a split system. There has to be a system to address inflation as it relates to supplies, goods, and of course groceries and critical items in your CPI bucket, such as gasoline and things like that. But then housing has to have a separate incentive, and the government has to create an incentivized program in conjunction with the Bank of Canada and the CMHC to say, hey, if you're buying a residential homes, the mortgages is a rate buy down. And you know what? Yesterday we had a conversation with someone in the 80s. And 80s where mortgages were 21%, they did the same thing. The government had bank buy down rate block mortgages to 11%, which sounds crazy, but the concept is the same.
That was here in Canada?
Yeah, in 80s.
Wow, I didn't know that.
So what happens is when the rates are so high, you have to understand where should the rate be high? Yeah, if I'm going to borrow money to grow a business, to bring in more commodities, and we're nervous about labor, okay, maybe that segment of the labor market has to slow down. But the homes market, where people buying homes, that has to come down. Now, Danny, you're going to look at me and say, hey, but homes is the biggest supplier of jobs. Right, so there's a healthy balance to make it work. But at the current moment, you're killing more people than you're helping with deflation.
That makes sense. Yeah.
So do you guys agree that there should have been some sort of rate hikes in 2022, but maybe not as aggressive? Like we talk off air sometimes about 1%, 2% should have never
I think it should have been higher.
No.
Yeah.
You should more rate hikes?
Yeah.
Why?
Because I was at a CIBC dinner with a lot of the CEOs in the industry, and Victor Dodik, CEO of CIBC, was there, and Benjamin Tal was there, and they spoke. And this is at the 49th floor of CIBC Square, and Benjamin Tal's opening statement was, if there was an AI-based banking system, Bank of Canada, they never would have raised rates because inflation had already tamed. And he showed you on the labor curve, and he showed how the labor curve was down already, was starting to come down, and inflation, the true inflationary number had actually gone down back to their target.
Wow.
So if you would have
When was this? In 2022 beginning?
this was last week.
No, I mean like when he's showing the curve.
Oh, now, today. Like today.
As of today.
So he said that last hike that the Bank of Canada did was completely unqualified for and they overshot. So he said, why did it happen? And he said, I spoke to the Bank of Canada, I spoke to Tiff Macklin, but why did it happen? Because they are human and they were influenced by the media.
Wow.
So here you have a Bank of Canada that's very humanistic, not looking at data anymore. Hence, the economist is telling you it's working. It's doing its job. Just stop. Start actually lowering rates, he said. And yet you're not doing that. You're doing the opposite. What does that mean? It means that you don't have a backbone. You are scared. And because you are scared, you are reacting to the media. So if that's the case, then you have to raise rates faster so that the media turns, so that public opinion tells you, you did enough. Stop it. You're not going to be blamed for lowering rates now. And that's what you need. You need the media to wake up and influence the Bank of Canada, because obviously that's what's happening. Because the true economic standpoint of our country is inflation is already under control. The city has balanced itself. So the prediction, according to Benjamin Tal, was that this September, they're going to realize they overshot and the market's going to take off. And the real estate market's going to take off. And that was his ending statement is, guys, be ready because the market's going to take off in September.
Sorry, just to jump in there with what he said, he thinks that they overshot, market's going to take off. So he's assuming they're going to bring the rates down?
Rates are going to come down in 2024, according to him.
But they're going to stop raising them.
They're going to stop raising them.
Yeah.
But they overshot, meaning now you're going to have very big deflation. Recoil. The demand is too high right now because, of course, there's not enough stock, as we know. The market's going to take off again.
Do you guys buy into any of the... you want to say something, I know, but do you guys buy into any of like the conspiracy theories of this is a manufactured way to just crush the economy, create a larger...
Absolutely. I mean, think about this. You are raising rates because the labor market is too tight, which means that and wage inflation is too high. So people all have jobs and they all got raises, so we're punishing them.
Yeah.
How ridiculous does that sound to you?
Extremely ridiculous. And also, if you're going to say, you know, the Minister of Finance, the previous one, who was saying, we're looking at the savings accounts of Canadians and we're really assessing the situation. It's like, what do you mean by that? Like, why? Like, just because people have savings, they earn it. Why would you?
The economy's too hot. We're making too much money. Everybody go for. Like,
are we doing too much? No, I agree. Okay, so you guys, you buy that.
Yeah. So they're nervous about inflation taking off. Okay, so you have to control inflation, but inflation should match wage growth. If wage growth was really at 5%, then inflation should be 5%. What the hell is 2% target? Where did that come from? Yeah. Exactly. Even Benjamin's always saying, what the hell is 2%? Why? Because you made it up 2%? Because it said it in a book 20 years ago when we didn't even have cell phones? Like, come on.
Not only is it made up, it's so manipulated with the basket of goods and services that they decide on how to, you know, include in that. But also it's like, okay, guys, then you understand that there is a money supply issue too. You guys are injecting money, then you're taking money out, and there's quantitative easing, but there's quantitative...
there's meddling.
There's so meddling. And it's like, you guys are manipulating that number. And unfortunately, you're just going to hit, in the media, you're going to hit the people with, oh, it's inflation. Yeah. But then how do you justify, maybe this is a question for someone else, but like, how do you justify as a government saying, you got to pay more on this, but then we're going to, what you're paying for basically, because inflation to me is a tax.
Yeah, it's human error. This is all human error. And that's what he was saying. And I think, listen, no one has a crystal ball, but what he was saying was there's so much human error. There's going to be a come to realization moment where you overshot on the rates. 2% is not your target anyways, even though you've already shot the 2%. And because now your inflation is below where it should be, the market's going to take off again.
But do you guys really think them increasing the rates last year really had an impact on Canadians that had fixed rates locked in, during the beginning of COVID at like 1%?
Listen, obviously there's an impact, but let's look at the real issue.
You see it so immediate.
Or even variable rate mortgages with static payments where they don't change, right? I don't think people have really felt it, right?
I don't think people felt the immediate impacts of it, but they did feel it. When they went to the grocery store, it was costing them an extra $60. When they were going to get gas, it was costing them an extra $20 to fill up. I don't think you directly saw it, but indirectly, it was a lot more expensive.
They said this originally, how many years ago? 3 years ago? This is transitory inflation. Transitory, right? Wasn't that the name, right? Yeah. No, but it really is transitory. You just didn't have the patience and perseverance like a good developer, eh? Or a good investor. Stick with it. Because what happened is you locked down the economy for 3 years. Yeah. You're going to have a lack of immigration. You're going to have a labor crisis. You're going to have people who just retire from the labor market. And of course, if you stop the economy, you're going to have a supply chain issue.
Exactly what happened.
Well, notwithstanding that,
relax, dude. Wait a couple of years for things to get back to normal.
Notwithstanding that, just talking about the lockdowns, people weren't spending any money, so they were doing things to bring them joy. So they went out and bought a new shirt. They went out and bought a new bag.
That does not bring me joy. A new shirt? Really? That was your example?
I'm just saying, like, whatever.
A new watch.
Yeah, a new watch.
A new experience.
So 90-inch screen TV. Now we're talking.
But my whole thing is, so what? Someone did that. It's their money. They could do whatever they want with it. And now you're just penalizing people because they saved money. They had nothing to do for 3 years because we were all cooped up in our homes. And now you're penalizing everyone that we were already penalized for 3 years. And now we're still feeling the effects of being penalized. And the people who still were able to work, because I understand there was a lot of people who lost their jobs, who did put in that dedication, who got raises, it literally didn't help them at all. So the reality is it's, this whole thing is manufactured, and we just need to get out of this. And I think the numbers are starting to show that we are out of this, but I just don't think they have a way to be able to recoil and say, hey, we messed up. Now we don't know how to fix it. They need to let it fix itself over time.
And that's the point. No, but that is the point. That because they're overshooting now, and that's why I said raise rates. Raise it so that you overshoot it. And I know it's temporary pain for people, but very quickly the media will turn around and say, oh my God, everyone's in so much pain. We have to stop. And all of a sudden, all the human people who are making these human errors based on public opinion will wake up and say, hey, you know what? Let's just stop meddling.
But why does it need to get to that point, though?
Because
it's ridiculous.
It doesn't need to get to that point. Exactly.
It's ridiculous.
Egos, politics, and just the concept of we have very weak leaders in today's
I honestly think it's also that people just need to point the finger. The Bank of Canada is going to say, oh, well, the media is talking and now people are saying it's too much. They can't make a decision. They just need to be able to point the finger. We did this because of this.
No, we don't have strong leadership. Even the Bank of Canada, Trudeau, we just don't have strong leadership with the leaders who are saying this is what's right for the world, even though it's not popular right now.
Yeah.
And what's right for the world is to just let things spiral out of control a little bit, because it will just balance out.
Well, isn't that why we are in a capitalistic society? That's supposed to happen.
Past
right?
that.
Let it figure itself out.
Yeah, I know.
But it's coming back. And what's amazing about all this, and what's amazing, because again, it's frustrating, it's not what should happen. But because we have this, there's a silver lining here again. And the silver lining is because they're their own worst enemy, they'll just make affordability that much more difficult. They won't solve the crisis. And again, housing becomes more and more rare.
I'm curious.
That's the bottom line.
Yeah. I'm curious, when you guys are, looking at developing and things like that, you guys, I'm sure, look at what's happening with the world in regards to the currency with Russia and China and the yuan and BRICS. Like, thoughts on that? Like, what do you guys think is going to happen with the American dollar?
The American dollar, well, the American dollar, the stronger Canadian, listen, a weak Canadian dollar is actually pretty good when you allow foreign income. I think one of the big mistakes is banning foreign buyers. You need foreign buyers. Now, what's interesting is there never was that many foreign buyers to begin with, but it was foreign confidence. We had a buyer who came to one of our projects, but they lived here, but they didn't want to invest because there's no foreign buyers. Why? It shows you, my money's not safe. The government can restrict who my buying pool is, right? But what you really need to understand is that when you have a low Canadian dollar and people are getting paid in American dollars, it's that much cheaper. Right now, Canada's on sale. There's just very few people who are
hate sales.
What the hell is wrong with you?
I hate sales. Nothing ever good came out of a sale. You get me sales.
I always feel like keeping up sales. I always feel like I'm getting ripped off out of syrup.
Because it's something that somebody else doesn't want.
Yes.
That to me is a sale.
But right now, Canada's on 35% off, 37% off.
So you say that, and I agree with you personally. Like that's the dialogue I'm having with my clients every day, saying, guys, just look back, just read.
2 buyers bought at one of our condominiums recently.
Yeah.
They're both in the shipping business. They get paid in American dollars. They're like, ka-ching, for 37% off.
I have friends in America. I'm like, guys, you guys are silly. Like, just put a deposit down. Now they're Canadian citizens that are working in America, but you have it even better. Like, you can actually buy this thing. Well, a lot of people can't, right? But I want to go back to that whole confidence thing, right? Because that is what economics is. A lot of it is like
it's actually confidence in motion, Subaru from earlier, but I changed it to consistency in motion. Just I don't know if I want to pick that.
Is that the type?
It's confidence in motion. I switched it to consistency in motion.
Strange that you know that.
It sounded good.
Actually, Subaru is the best in that.
Subaru. So I don't know who knows this.
Do you remember that ad that they used to have? They had the Subaru.
I know nothing about Subaru.
So they had an ad, the Honda Accord, and then they had the Subaru, and they wrote Accord, by definition, a compromise.
Oh, wow.
Why do you know so much about this?
That's advertising.
He owns some stock in Subaru.
No.
So in September, this whole confidence thing, right? And we know that a lot of economics is just your mindset, people's emotions, again, what the news is telling them or whatever. But when in September, if Benjamin Tall is right, and he's not the first one, and you're not the first one who I've heard say that.
Well, he's fundamentally right. So if it happens in September, great. If it happens in October or November or December, we don't know. But fundamentally, he's
fundamentally.
Right. Yeah.
But do you think that there's gonna have to be like a sort of event that just gets people to say rates are not gonna change. This is what it is. We need to get in. We waited 18 months. Nothing happened. Typically, downturns last 18 to 24 months. It's already been 18 months.
Yeah.
We have no choice. We need a place to live. It seems like it's getting more and more unaffordable. Let's jump in. You think that's what's going to happen? You think there's going to be an event, or it's just...
I don't know if there's an event per se. I mean, we've seen, look at markets, like just one day to the next can change the sentiment. So I don't know if there's particularly an event that needs to happen, but I think it will change overnight.
So you advise now, anyone who's listening to this wants to get into real estate, do it now before it's too late.
Honestly, anybody who looks at the past and says who was successful in real estate were those that were consistent. And those that, even though there was downturns, they kept putting their dollar in that year. They bought in the low, they bought in the low, they bought in the low, and they kept buying and buying and buying. And then 30 years later, it's always worth more. So what's interesting, take a look at the last 10 years in real estate. And I actually did this in condo pricing. And the average is 7.3% of what the price has rose in the last 10 years, year over year, despite downturns. Look at over a 20-year period, it's even more. 30-year period, it's even more. But what happens is that despite the ups and despite the downs on when you got on, when you got out, years later, it's always worth more.
Yep.
That's why I money. I buy and hold.
That's all we say to clients is, listen, if you're getting into it hoping for some appreciation within the next year or so, that's gambling. Like you don't know what's going to happen, right?
You're in real estate because it's a long man's game.
Exactly.
Right? It's the smart man's game. If you want an immediate gratification, you can go to the stock market where you can have liquidity.
Or crypto.
But if you want, tried and true consistency,
that's kind of like what we were talking about before, about there was that lady in the news. I don't know if you guys saw it, and she was in Mississauga. She took out a home equity line of credit on her owner-occupied house, and she bought an investment property, assuming the tenants. And the tenants right out the gate were like, yeah, we're not paying you any rent. And she went to the news outlets and said, you know what, it's taking me too long to evict them. As we know, it's going to take about 8 months. 8 months is not even close, but a year or so to get the tenants out. And that's somebody, in my opinion, where they extremely over-leverage themselves, hoping that these people are going to make the payments for her. And if they don't, there doesn't sound like there's a backup plan, because apparently she's going to lose her house now. And I said, that's a really, really risky way of approaching real estate, where you're kind of depending on tenants, especially in a province like Ontario, where landlords don't really have too much laws and rights when it comes to eviction.
Yeah, so it's getting better because Doug Ford has instituted quite a few new resources to the landlord tenant board. So that is something the province is doing to improve dramatically the process. I'm hoping that it will come to fruition fast. But yes, the system is right now not working towards people. We can talk about rental replacement. They make it almost impossible to replace a rental replacement, which holds back a huge amount of stock in the city. Obviously, when you give municipalities power and councillors, they end up abusing it because they end up listening to the few people that are the noisiest, and it's to the detriment of the many. But the landlord-tenant board is the one thing that the province needs to do more of, because you're right.
Yeah.
You can't let somebody suffer. I can't let a system be broken because of a few.
And I don't know if you saw the article earlier today. I was mentioning it to Jordan, that there's an entire apartment building. I don't want to say all the tenants in there, but many of them who are on a rent strike. So the landlord said, okay, I'm filing for eviction.
Yeah.
And as they should. Like, no one should be living in a place for free. If you wanted that, you could buy your own place and hopefully never have a mortgage, right? Like, the reality is we have mortgages. We have to pay rent. So why doesn't a person who's renting from somebody have to pay rent? Like, the reality is we all have somebody to pay. We always have somebody to answer to. So we also as landlords have payments that we need to make. So why is it fair that someone's living in a place for free? It makes no sense.
In that story, though, was the landlord trying to increase the rent? I think they were trying to increase it by a disproportionate amount, like an amount that they weren't allowed to increase it.
We don't know all the details.
Yeah.
We don't know if they did the renovation approach or what.
Yeah.
Yeah.
Listen, it's everybody's right. He's obviously filing for eviction. I think if he thought he did something wrong, he wouldn't go that far, because they'll rule probably the tenants' favors.
Yeah.
Yeah.
Obviously, there's stuff we don't know about.
For sure.
Behind the scenes. I know we're cutting it very close on time. I just wanted to ask you about, in recent news, obviously the media likes to highlight negativity because it's what we as humans are supposedly attracted to. But there have been builders and other companies that there are always, if you're in the industry, there are always cracks in these companies that we know about, but the consumers may not be aware about. And more recently, there was some like serious embezzlement and some sort of, different accusations pertaining to this one home builder. What are your thoughts as a builder when a builder does that? What are your thoughts?
Well, I mean, it's awful for embezzlement. I think that as a whole, though, there's less embezzlement in the home builder industry than in any other industry. You've heard about this one story, and you can count on your fingertips
How many other stories
how many other stories there are. Go into the jewelry business, I'll tell you up to about 50 billion stories, right? Yeah. In most industries, there's a hell of a lot more embezzlement, but we're a pretty regulated industry. It's very rare to have such a story. There obviously are a couple of them because that's the way the world works, but it's not a commonplace. It's very rare.
I want to ask you, there was two scenarios or situations I wanted to ask you about. That was one of them. And the other one is a little bit closer to home. Sure. With a parent, I don't want to say a parent company, but a family member's company that you mentioned earlier on the show. Uh-huh. So I live across the street from there's this massive fire that took place in Vaughan
by Uncle George at Linvest.
Yes.
Yeah.
And, goes without saying that a lot of people are like, oh, insurance scam. And I'm like, guys, I'm telling you. Yeah. Was that your first time hearing that?
Yeah, that's my first time.
How many people said that? And I go, guys, these are big boys we're talking about. And I know another partner on the site. And I said, these are big boys that we know. I go, there's no need for an insurance scam. What are you going to get insurance on? The lumber that was up? Maybe the foundation? I don't get it.
Insurance scam?
Insurance scam for 40, 50 homes. What do you say to those people?
Guys, I mean, with all due respect, that George Hofstede doesn't need an insurance scam.
That's it. That's the punchline. You're right.
There you have it.
No,
I mean, listen, unfortunately, in fires do happen on site. It does happen. It's not the first time, and it won't be the last time. They're wood, for crying out loud. Untreated wood at that point, right? Mm-hmm. So you're going to have fires. Linvest is a giant company. It's part of a very large family with a lot of legacy projects into it. It's a huge nuisance when you have something like this. It's just comical. The whole concept of it's just comical.
You're like, no, come on, buddy. I made it to global news that night.
I feel like I saw you.
Yes, I took advantage. I hate the shot. I was like, this makes me look like I had my shades on. It was so sunny, fiery and smoky, and I was like, this is a bad look for me. Words of wisdom for not only the younger generations looking to get into the market. Your final thoughts, words of wisdom, but also maybe for Canadians as a whole, because you guys get to travel a lot. You get to see how other people are living around the world. Maybe share those words.
I think words of wisdom for me, and I think it's just a testament of who I am, is consistency is key. When shit's bad, it's going to get good. Stay consistent through it being bad, and you'll be able to revel in the fact that it's good. I think that's the way I live my life. I think it's the words of advice that I could give to anybody. And, just for Canadians coming in, I mean, we talked about people saying that they wanted to wait to buy real estate. I've never met one person who said that they waited to buy real estate, that they didn't regret that they waited after that time. There's never a good time. It's never easy, and it's never going to get easier. Sometimes you just have to take the plunge, and that's the only way that reward is when there's risk. It's really all I can think in my mind in terms of advice or kind of words to give to anybody who's looking to come to Canada or invest in Canada.
I love it.
And my words of advice is that Toronto is a very dynamic city. Find something that's unique, that's rare. Find something that talks to you and get involved with it. And like Jordan said, it's going to be scary. Take the plunge. Because if you want to be rewarded.
Isn't Take the Plunge from...
the Nestea commercial?
Yes. That's new. That's new.
Oh, I don't want to say it like, what's going on here?
What's going on here?
Just do it.
Just do it. Who gave them that? I was watching the movie. Who gave them that quote, just do it?
I haven't watched the movie. I really want to.
It was so
it's a great movie.
Oh, I need to watch it.
Oh, my goodness.
It was full of good actors and stuff. It was, I liked it, but it was slow kind of at the beginning. But it was good. It was a good movie. But where did they get just do it from? I forget. It was actually very simple how they came up with it. But
usually the best things in life are simple.
Yeah.
That was a good one.
Yeah.
Mic drop.
Mic drop.
Well, guys, if you made it to the end of this episode, connect with these two at Altree Developments. They're on Instagram. They're on social media. Anywhere else you guys would like the audience to connect with you guys?
Sure. We're on Instagram. We're on social media, like you said, at our website. Join our mailing list. We have lots of projects for sale. Kingside Residences, which we just launched recently. Yes. Truly unique. this is a really unique one in its location and where it is, and it's beachside living and it's crazy terraces. Again, everything that we do has a unique touch to it, because we believe in that concept of it's going to get rarer and rarer. So you might as well get the rarest of the rare within the rare, right? So if you can find a really good building that has a unique offering, whether it be the crazy vistas of the bluffs, the beachside access that makes this
Glass
more unique than
elevator.
others, glass elevators or crazy terraces or something that makes this unique, it will amplify that return that much more.
And plus, you're one of the developers that you are building communities and not necessarily one-off buildings. And so there's more to come.
Absolutely.
Your investment is safe.
It's always more than one building.
That's right. Yeah. All right, guys. Again, thank you so much for your time. Thanks for coming on.
Thank
Thanks
you.
for having us.
Yeah. And until next time, you guys,
We're out.
we're out.